The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 28th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a magical Monday. You know, here at the Hotel California, we've changed our check-in hours. They begin at 8 a.m. each and every day. That's right. We've got 10 hours of live programming from 8 a.m. till 6 p.m. in the evening out there. Kicking off our day for us is John Logan. He has a great show. It's called the Global Market Pulse, so you can start tuning in there. Then you've got me for 2 hours as I come in at 9, from 9 to 11. And don't forget, TFNN, we are a interactive forum. That means you can give us a call. 877-927-6648. Internationally, you can call us at 727-445-1044. We'd be happy to take your call, take a look at your stock chart, answer whatever question is that you might have out there. My outcome here during the next hour is to teach you some of the tools that will help you to master trading. We're going to take a look at some price projection tools and try to understand the target areas for these markets as they are trading lower this morning. We'll use A to B equals CD patterns. We'll use Fibonacci expansions and retracements. We'll utilize candlestick patterns to help us identify areas of support and resistance out there. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Dow is off 65 points right now, trading out at 16,894. S&P down 8, trade at 1970. NASDAQ Composite off 21 points, trade at 44.28. Russell 2000 off 7, trade at 11.37. NDX 100 off 16 points. So we've got lead the charge to the downside. It is the Russell 2000 off 0.6% out there. So let's go start in and take a look at the Russell 2000, get a feel for what's going on from a weakness standpoint. So we'll put the Russell 2000 chart up on our screen out here. We'll see it's trading out at 1137.30. Now, if the Russell breaks below the trading session from July 17th. That low out there to be watching is 1131.42. You had this nice big bullish engulfing candle. So last time that we saw the bulls out here, it was right here on the trading session of July 18th. That low is 1131.83, but it's really the low of the prior session out there. If you break below that, that likely sets up an A to B equals CD to the downside. If we take a look at where that would give us a price projection, I believe that'll take us right down to the bottom of the consolidation out here. The 1-to-1 A to B equals CD takes you to 1081. The 1 to 1.272 takes you to the 1059 level. It's really that 1081 area that is likely, we'll see, is likely the spot where we will see price hold. We take a look at the consolidation that it's really traveling in. It's going to be the lows of February 5th. That's at 1082.72. The hammer low from May the 15th, that's at 1082.53 out here. And the top of the consolidation very clearly is at the highs from March the 4th. So you've got the Russell 2000 trading in a consolidation. Now, if it breaks through that consolidation, that delivers a whole new message to the downside. First, it's got to break the B point. It has not done that. That's that low of 1131.42. We'll take a look at the IWM to give you a feel for what that is as well. But if it breaks through this consolidation, it's been in a consolidation since November of 2013. The Russell 2000 is what I'm speaking of here. If you were to go from the low here, you could do the math. Do the math of 1083. That's the low. And the high is 1212. So 1083, 1183, you got another 40 points, so about a 140-point move, give or take, I would take, to the downside. That's if, in fact, you were to see the Russell 2000 close below 1082.53, that hammer session from May 15th. Right now, the test is going to be in the Russell 2000 down to the 1148.18-ish area. If it takes that out, now I'm going to put the 120-minute time frame chart. Just curious whether or not we've got on Friday, whether or not inside the Russell 2000, whether or not it pushed price into the lower part. Yeah, it did push price into below the 30 level of the relative strength they're reading out here, but right now it's pushing lower with more weakness out there, so this pattern here likely to fail. We can see prices closing below a hammer candle on its 120-minute time frame chart. That was from 8 a.m., and that was on July 25th out there. That low was 11.36, so on that last bar that took place here coming in at 10 o'clock, you saw it close below a hammer candle. Not a good thing. That says the next hammer candle is down here at about $2,200 on July 17th, out at a price low of 11.24. So that's what's going on the 120-minute time frame. Let me switch over for you, and we'll take a look at the ETF and get a feel for what the IWM is doing. Let me take a look at the daily chart here for the IWM. Trading right now 112.70. Volume so far in this morning's move, it's had volume of 8.6 million shares, going into a swing point that has 62 million shares. So pretty good volume for the first 45 minutes of trading. Inside the IWM, it'll set up a 1-to-1 A to B equals CD down if it can close below 112.20. That's your number to be paying attention to. You're trading at 112.75 as we speak right now. A close below 112.20 with volume, more than 62 million shares. That would confirm an A to B equals CD to the downside and send you back into that May 15th area, anywhere between the 107.44 to 108.87 range. Let's go check in on the S&P 500. Let's go switch over and take a look at what it is doing out here. We'll give you some levels to be focused on and paying attention to. Right now, we can see a little trend line inside of the S&P 500 that it's headed to. That's coming off of the low here from April 11. That price point is 1814.36. You can use several different areas as your next touch points for that trend line. You can use the May 15th low, 1862.36. If we see the S&P on a daily basis break below that trend line out there, that'll say price should travel to at least 1923. You're at 1970. Why do I say at least 1923, 1924? It's just a dead cat bounce. Just as a 0.382 retracement off of the low from April 11, 1814, up to the high of 1991. That little doji candle inside the S&P 500 out there from July 24th. So right now, headed to that little rising trend line out there. If we take a look at the SPY out here, let's go see what the SPY is doing as we speak. The SPY trading down so far with volume in the first 45 minutes of trading has been 17 million shares out here. Now, this has really been in a real upper level consolidation area. Let me get rid of that. Excuse me, let me get rid of a number of things out here. Let's take a look at that same trend line coming off of the April level. You'll see a red line on my screen out there. It's a longer-term trend line that takes you all the way back into the January 2013 level. So that is a secondary trend that, in fact, let's go ahead and we'll make that one here. We'll make that one black, and that way I can leave the red one. So the little black line that you're going to see on my screen out here, that's a trend line going back to 2013, January 2013. We took a look at a trend line in the S&P 500. Let's do the same thing inside of the SPY out here. And that trend line, you can see price inside the SPY is really trading right into it as we speak. Volume right now, 17 million shares. Last time we had volume to the downside back on July 17th, the swing point. That is trading into 145 million shares. Let me see here. If I do some quick math, 145 million shares, and today, 18 million shares, 26. Interestingly enough, does not have the same volume characteristic of that low out here from July. Excuse me, sorry about that. From July 17th. But we'll see how the day works out. Now, if we take a look at retracement levels from April the 11th to the high out here on July 24th, your 0.382 retracement level is 192.28 out there. If we take a look at it, excuse me, if we take a look at that, I would say that it's probably 192.38 doesn't hold it. It probably more likely is the trend out here. That trend, that black diagonal line, that's going to be somewhere around the 189 level. We got to take this stuff one moment at a time. If we take a look at what's going on inside of the Qs, let's go look at that right now. Let me put the 120-minute chart here for the ES Mini up on the screen. So let me do that out here. Give me a moment to pull that up on the screen. So if we take a look at that's the Russell 2000. That's all right. We'll switch that over to the ES Mini, to the September contract out here. It's right in front of me. There we go. So as we take a look at this, clearly the seller's in control. Nothing but these little green signals here from the Rhodes Momentum Trading Strategy. We can see here in the 120-minute time frame, you've got an RS reading of 29.06. So things are starting to get a little bit sold as we speak right now. That doesn't mean that it ends right here, but we will expect the market to start to move a little bit sideways out here. And at this stage, no bottoming pattern that is in place here, price relative strength divergent, or anything along those levels. Nothing, no signal there inside the 120-minute chart that I can clearly see to provide to you. Nonetheless, let's go and take a look at the Qs out here. Let's stay with inside the index ETFs as well as the indices. If we take a look at from the low out here from April the 15th, that's at a price point of 83.28, all the way to the high that was put in out here on July 24th. That's at 97.51. Well, first of all, you've got that's an A to B equals CD pad. I'm going to go ahead and get rid of that. There we go. We'll clean that up. But let's take a look at a trend line out here inside of the Qs. We'll use that same level of April the 15th out here. See, the Qs have a long way to go before they hit that trend line out here. If we take a look at retracement levels at 92.07 is your dead cat bounce, is your 0.382 retracement level. Qs so far this morning trading down with 5.6 million shares out here. It's not exactly huge volume. It's not huge volume. Last time we saw the Qs make any move lower. Now, the problem here's the bearish thing about the Qs. There's no real volume to the downside here as we speak this morning. I know you might say, "Hey, that's an unusual thing to say." From a bearish side, you want to see volume accelerate, but not too much, because you start to get a volume day such as we had out here on the trading session of April 15th, around 84 million shares, and so we've been trading for an hour at 45 minutes, 6 million shares. Let's say that it trades at about 7 million shares times 6. You get about 40 million shares versus something like this that typically makes bottoms with 75, 85 million shares. The last time we saw volume where it was making a low back in February, the February 5th low area, we were looking at volume in the 67-ish million range. That was on February 3rd. So the Q is the most bearish thing, is that the Qs don't actually have volume to the downside here this morning. So a little bit opposite from what most folks might take a look at. What we know about the Qs, though, is they make lows with high volume, and that is not the current pattern that is present. If we go take a look at the actual indice, if we take a look at the NDX 100, and we take a look at its trend lines out here, should be right here in place. We'll take a look at that same trend line. You can see that is probably the first target area. The dead cat bounce inside of the NDX coming off of the April 15th low out at 34.14 to the high that was put in here a few trading sessions ago on July 24th. That was at 39.97. That dead cat bounce is 37.74. She's trading out at 39.39. This is Steve Rhodes. This is TFNN. We've got the Dow off 80 points. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 73, S&P down 11, NASDAQ Composite off 34 points right now. Moving to the upside in the market, Family Dollar Store, FDO is the ticker symbol. Merger with what's the other one? It's not on my screen here, is it? Family Dollar, I just need to click on this, with the Dollar Tree. Thank you. With the Dollar Tree out there, you've got this. That's up $13. Wynn Resorts, though, no merger going on there that I'm aware of. It's up $4 and a change out here. So let's go check in on Wynn Resorts. I don't see any news behind the move out here. Let's take a look at the daily chart. WYNN is the ticker symbol out here. So let's pull this back. This is trying to trade up into its most recent swing point out here. This is from a little doji swing point out here from July 3rd. July 3rd obviously going to have light volume because of the shortened trading session. 672,000 shares out there. This morning up with 676. So light in trading session or not, you do have Wynn Resorts moving higher with some volume out here. If we take a look at Wynn Resorts, pretty much a sideways consolidation pattern that you'd say that it is trading into. So if it can take out the high from July 3rd, it'll probably gravitate up towards either the May 29th level at 220. Maybe it's going to be the May 2nd level at about 222 out here. And that is on Wynn Resorts. Trend line-wise, looks like it is broken through the little downtrend that it was in. Yeah, it's done that. But let me see here if there's anything else that we can take a look at. Let me do this. Give me a moment here. Let's go take a look at its market profile. So let me put that up on the screen for us. Let me start that here. and we'll see if it's above resistance level. No, it's got its resistance level cut out for it at 213.08, which basically is going to be the high of that trading session from July 3rd out there. So getting above that 213, it's moving in there with volume. It needs to close above 213.08, and then you'll probably see it move up into that little sideways consolidation, as I say. Probably not get to any more than about the 222 level. And that is on Wynn Resorts, WYNN. We've got the Lincoln Electric, LECO is the ticker symbol. Now, that's up here this morning with about $2.70, about 4%. It has moved above a market profile resistance level. This had made a retracement, looks like probably about a 0.618 retracement. That's from the most recent low, which is May 20th, to the high out here in the trading session of June the 17th. How about that for making a 0.618 retracement? The exact 618 retracement number is 65.68. The actual low that it got to was 65.68. You tell me, how does that work, folks? I'm coming back to the low from May 20th to the high out here on June 17th. So it makes an exact 0.618 retracement. Now, let me go ahead and delete that from the screen out here. And now we're taking a look at it's moving higher. Volume-wise this morning has 232,000 shares. The swing point that it's moving into has 631,000 shares. So you've got volume moving into a swing point. The small A to B equals CD on this equity. And the ticker symbol is LECO, Lincoln Electric. Your 8 point's going to be, well, I'm using the smaller A to B equals CD, by the way. I'm using the May 20th low. I'm using the high out here from June 17th. I'm using that 0.618 retracement low out here from maybe it was the 0.786 retracement. Maybe that's what it hit. My apologies, because I see that. It was the exact 0.786 retracement, not the 0.618 level, where it got to 65.68. Nonetheless, the 1-to-1 A to B equals CD takes you to the 73.05 type range out here. Let me pull this back just a bit, see what else this thing has on its chart here. That it has to really contend with or worry about. Nothing much that I see. LECO is the ticker symbol. Let me put this on a weekly time frame, get a little bit better view of Lincoln Electric out here. And on a weekly basis, really not too shabby out here. That weekly swing point, by the way, is June 16th, and the volume there, 2 million shares out there. So if we can get above that with more than 2 million shares, then your A to B equals CD to the upside. Takes you, this is the small one, takes you to a price projection of about $73.92, 76.16, gets you back into its swing point high. So looking pretty good here for Lincoln Electric. LECO is the ticker symbol out there. What else do we have moving? Let's take a look at, let's kind of switch back and forth. Let's take a look at what's moving to the downside out here. We'll have to wait till we get back from break, but we'll take a look at Cal Maine Foods, CALM. They were out with numbers here. They generated net income of $31 million versus a loss of $3.8 million, so not too bad there. Operating income, we'll take net sales are up as well. However, it's trading lower. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 65. S&P is down about 9. Before we went to break, I mentioned CalMaine Foods. CALM is the ticker symbol out here. And what a turnaround this thing is having today. Now, numbers-wise, I don't know what they said on their conference call or what they released. In summary, though, they generated revenues of $371 million versus $325 from the prior year. So growing the top line, no problem. Truly growing the bottom line. Operating income of $47 million versus $7.28 out here. So that looks pretty good. But boy, if we take a look at the stock chart, boy, which is the real fundamental of any stock, right? It's what are the shareholders doing? Well, they're selling this off big time. It says a big key reversal session, a big key reversal day. Looks like a big key reversal week as well. I mean, at this stage here, and we're only at the 10:35. We've only been trading for an hour. So intra-session, it opens up at a price point of $79.68. On the good news, it goes ahead and spikes up to a high of $81.91, and then has been dropping ever since then. Volume behind the move here so far, 234,000 shares out there. So one could say, hey, it was made a higher high with the volume out here. You don't like to see something making a higher high with a key reversal session out here or some type of large bearish candlestick. So in this case here, let's take a look at CalMaine. As I say, volume so far, 235,000 shares. Last time that this had any sign of strength, real sign of a strength out here, was a breakout session from March 31st, 458,000 shares. So you're going to topple that volume-wise, or it should topple that volume-wise in today's trading session out here. It had a sign of strength earlier as well, back on the trading session of March 4th, I should say, with 424,000 shares out there. So CalMaine, Where is this likely to head back to? I would have to say, if we take a look at retracements, I would use the swing point down here, what looks like January 31st. Let's see, that low was 48.90. You got 48.90 as well on February 5th. So we use February 5th as the benchmark out here from a retracement standpoint, all the way to this morning's high inside Cal, Maine. The dead cat bounce, well, that's should be basically a foregone conclusion out there. That's at a price level of 69.30, but very likely the 0.618 retracement level, 61.51. If we take a look at even just a trend line out here off of that February low to where we're at right now, that trend line, is going to be, let me draw that trend line again. Sorry about that. I just didn't click properly. There we go. That trend line, is in between the 0.382 and 0.618 retracement level, but it would look like this is a very bearish pattern out here inside of Cal, Maine. You got to wait to see how the day finishes out here, but you don't like to see that as a pattern. Let me put this on a weekly chart. See if there's any high volume bars on a weekly chart that stick out to us for Cal, Maine. No, nothing really substantial out here. You can see if we take a look at the weekly trend line, though, that weekly trend line takes us back, and it takes the same thing back into that February time frame. So that's if it breaks that trend line, based on that, combined with the key reversal that you can see it's also doing on a weekly basis out here. Has this had a key reversal week before? Looks like the week here of December 30th. Let me see. The high on the 23rd was 61.34. No, it did not on 61.33. That was on the week of December 30th. So no key reversal session there. Nonetheless, Cal, Maine pulling back and not having the prettiest of days inside of the market. Compass Miners, or Minerals, I should say, CMP is the ticker symbol. That's off 7% here this morning. Let's take a look at its daily chart, get a feel for what kind of volume and see where this may be headed to. So this is not good inside this equity. It's moving back with a pretty decent volume here this morning, taking out a B point of an A to B equals C to the downside. 499,000 shares, taking out 377,000 shares from July 17th out here. So where is this thing headed back to in such a quick fashion out here? You'd have to say what sticks out to me is this trading session from March 21st, 1.2 million shares. But heck, it's not anywhere near that level just yet, I should say. That high is $82.50. You're at 87.16. But even pulling back into that level with too much volume, already done 500,000 shares out here. So this thing, was there any news on Compass Minerals? Let's see. Looks like they're out with their numbers here. Generated net sales of $186 million versus $173, so they beat their top line. Net earnings, so they got a problem with their net here. $4 million versus $10.6 from the prior year out there. Nonetheless, let me put this on a weekly chart here real quickly, see if there's anything that sticks out for us. And this is, again, CMP, Compass Minerals out here. Oh, yeah, I'd say there's something that sticks out at us. And it's trading right into it as we speak right now. On the week of July 29th, you've got a high volume low that has not been tested. And that looks like that may be where Compass is going to head to. It looks like it's got an RSVP to go down into that 64.24 level out there. Now, on a weekly basis, that had 5.6 million shares. Again, today it's already done 514,000 in the first hour and 10 minutes of trading out there. I can't do the daily math on that, but if it's accelerating with volume, that is likely where it's headed to, and that's on the weekly chart for Compass Minerals. Let's see, we've taken a look at a few to the downside. Let's take a look at Herbalife, see what's going on inside HLF, up 5% here this morning, up $3 and change. Let me take a look at the daily chart first for Herbalife, see what kind of pattern it may be forming out here. Herbalife, the one where we've got the issues going on, potential issues, I suppose, going on between Ackman and Carl Icahn. So this morning here, this had some big volume to the upside. The day that it released its earnings, which was on July 22nd out there, moved upside, topside with volume of 27 million shares. That was going into where it had a downdraft of 15 million shares, but it's up above that level. We're trying to get up above that level, and that is at the March 12th trading session. Let's go take a look at the market profiles on this as well, see what shows up on our screen out here. Here again is the daily chart. So today, getting above resistance 66.66 out there is its market profile. That sounds a little devilish to me. Nonetheless, if you can get above, it's already done. It's really taken out a swing point with volume. And that swing point was this little shooting star in the trading session of June 25th. That high out there was $66.81. And if we take a look at that pattern, let me take a look at the A to B equals CD out here. If we take a look at that, let's come all the way back down to the low of March the 21st out here as our A point. Let me start the tool up, though. There's our A point. Our B point we identified as this little shooting star candle out here. That was a reversal. Well, it's already made the one-to-one. 69.96 would be the one-to-one. But the way it's come off this C point, it actually says that Herbalife could trade up to the 74.71 level. So out of curiosity, let's go take a look at retracement levels. Let's take a look at retracement levels from its high out here on the trading session of January 8th down to the low where we began our B point. And it's already done the 0.618, or it's about to do the 0.618 retracement level, 70.46. So if it can get above 70.46, 74.71 to 76.20 is likely the target area, and that is for Herbalife out there. Mr. Ackman may not be happy to hear that, but that's what the chart patterns are suggesting to us. That was HLF up $3, up about 4.5% out there. Let's take a look at Universal Health Services, UHS. Man, I'll get that right. Now, this had gapped up on Friday. Out here, had some good volume behind the move as well. That was up with 2.8 million shares. Let's put this on a long. All right, folks, we're taking a look at Universal Health Services out there. Sorry about that little interruption out there. I've got a little modem issue that I'm going to try and get taken care of and replaced here today. So you got Universal Health Services. UHS is a ticker symbol on a weekly basis. The question is, where is this headed to? And it looks like it is headed to the moon out here. No real good way for me to, I would say, give you a reliable price projection on this. Well, let's put this on a monthly chart out here. Maybe if I look at a monthly, we can find a to B equals CD pattern and give us kind of a feel. Yeah, we can do that. So the monthly chart out here, the A point is going to start all the way down here at the lows from November 2000 and, no, was it? Yeah, November 2008 when it went ahead and made its low. So this is on, oh no, I might have to start this up. Son of a gun. Uh-oh. There we go. So there's our A point. It is. I'm using the March 2009 lows out here. That's okay. That'll be close enough. We're going to use as the high the May 1st 2011 high out there, and then the C point's going to be your low from the trading session of October the 1st out here. So on its way to forming a 1 to 2, A to B equals CD to the upside. That takes you to about the 114 level. Right now, trade out at 107.08. Very bullish looking chart out here, making highs with strong relative strength out there. So no patterns that it has to worry about as we speak right now. That is on ticker symbol UHS, Universal Health Services. Hey, let's go get some Buffalo Wild Wings out here. You got Buffalo Wild Wings, BWLD. It's trading to the upside here this morning. No earnings release or anything along those lines out here. Just up about 1.5%, up $2 and change. Looks like this is at all-time highs as we speak. This is on the weekly chart. This is the monthly chart. Let's go see what's going on its daily time frame out here. Daily time frame this morning, taking on a most recent swing point out here from the trading session of July 1st. That high is 167.36. Only 438,000 shares up there. It's done 178 today. So it's got the volume as it moves into a swing point out here. That could be setting up another A to B equals CD to the upside. On a daily chart, this completed at 1-to-1. A to B equals CD. It did that off of this little high volume low out here from the trading session of February 5th. That was your A point. Your B point was that little shooting star on March 21st, a reversal candle, 159.81. Makes about an 80% retracement down into the April 20. Wings was 167.45. It actually hit 167.36. You got to love that. Now, we're taking a look at it, taking on a swing point. If it can close above that July 1st level, I'd say you've got another A to B equals CD to the upside that it would be trying to form out here. We'll just use as our C point, our A point, the May 15th low, the B point that high from July 1st, and your C point, a little pullback, retracement down into the July 18th time frame. That would say Buffalo Wild Wings, the spicy sauce version of it, says it likes to get up to about the 180.78 mark as your 1-to-1 A to B equals C to the upside. But heck, if it can take out that B point today with some volume in a market that's been trading lower, I'll say Buffalo Wild Wings wants to go visit that $189 level. What's up with these restaurants that are trading so well out there? You got El Pollo Loco up 21% on its IPO. Of course, we know that Chipotle has been moving higher as well. In any event, let's go take a look at something that is moving to the downside out here. Let's take a look at the jazzy one. JAZZ is the ticker symbol. And as we take a look at JAZZ, excuse me, don't mean to do that, down about with some taking out a B point here this morning. 1.5 million shares on July 18th. So far today, it's done 247,000 shares in an hour. May not be able to take out that B point with volume. Nonetheless, if it does, there's a little high volume bar down here from May 9th. If we take a look at the A to B equals CD pattern to the downside out here, I would say that price would give you a projection of about 124 to 116. Interestingly enough, at the 124 level, you've got that high volume low. So it looks like the jazzy one, JAZZ, Jazz Pharmaceuticals, headed for the 120.38 to 129 level. And we'll see if it can hold price there. Been in somewhat of a consolidation. If it can hold those lows, it's really been consolidating ever since about the time frame where it broke out back in January of 2014. 877-927-6648. Dow's off 49. S&P is down 7.5. We get back from this break. Let's go look at the rising price channel, the 120-minute chart for the Dow, which seems like it's holding as we speak right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 48 points right now. S&P is down 7. Don't forget, we begin our day here. You can check into the Hotel California each day now at 8 a.m. as we begin our programming, going live from 8 to 6. Following my show, as you just heard, Basil Chapman. He'll be up next, so go get your surfboards ready. Get ready to ride the wave with Basil. It is a marvelous Monday. That means our man Larry Pesavento will follow Basil. Then we've got Daryl Martin, David White, and then from 3 to 5 is now the Tom O'Brien show out there. So stay tuned for all of the action out here. You get different reads on the market. I mentioned before we went to break, if we take a look at the Dow out here, I've got a little bit of a rising price channel out here. That's the black lines that you see on my screen on the upper portion side of my screen. Price had broken through here during this trading session that we're in right now. Now, the 120-minute time frame that we're in here right now does not end till 12 noon. So we'll see if price is able to go ahead and break through that area, if it gets back inside that rising trend. Now, if you're looking at the bottom of my screen, I'll put a different chart up here, maybe a little bit better visual. You can see that the Dow futures here, 120-minute time frames we're looking at, made a lower low with less relative weakness out there. Now, that alone itself does not mean that the market reverses from here. Let me put this up on my screen here. So we'll put one of the Rhodes Momentum indicator charts out here. What you can see is if the Dow were to close out right here, again, remember this does not end until 12 noon. So we've got, an hour and 5 minutes before we know what kind of candle forms out here. But it has the potential as you can see, to form some type of bullish reversal signal, such as a hammer candle. If we're to close right here at 16,851, that would be a hammer candle. If it closed somewhere near the 16,855, 6, 7, it probably still 8, maybe 9. It still qualifies as a hammer candle. And that's what you want to see for a market to at least go ahead and bounce. Now, it is certainly in an oversold condition out here. And so the condition needs to be worked off by either moving sideways, horizontal, could be moving higher as well. So this candle formation here, as we close out Basil's show today, will be very helpful. Now, interestingly enough, if you take a look at the last time that the hammer was made down at these levels here inside of the Dow, so we know where the bulls are trying to hang out, and that's out here at the trading session that took place at 8 p.m. That was on July the 17th out here, July 17th, and that low of 16,835 is a low that was attacked here this morning, if you follow my crosshair, but thus far is holding as support. We'll see if it can continue to hold as support and then go ahead and form a price relative strength divergent bottom. Why is that important? Well, folks, if you take a look at the high that was made out here inside of the Dow, it was made with a price relative strength divergent top out there. So now you've got one forming, and we know that the Dow here has been the weak link inside of the markets out here, so we'll pay attention to the Dow for any potential reversal signals there. But we won't have any real information, quite frankly, until 2, because not does it just need a reversal candle coming in the 12 noon time frame. It'll need some follow-through to the upside. That's what's going on inside the Dow. Let's take a quick peek here at the Russell 2000, although I've got a 10-minute delay. It's really the battle between the Russell 2000 as well as the Russell 2000, the Dow against the S&P and the NASDAQ out here. Russell 2000, no chance for it to make its price relative strength divergent low out here as I see it as we speak right now, and I don't think that those patterns are valid inside the ES Mini. No, certainly not valid inside the ES Mini, but it too is trying to form a hammer candle of its own as we speak. But again, you've got an hour and 5 minutes left in this trading session. So folks, thanks so much for joining me on Marvelous Monday. Stay tuned. Our man Basil Chapman is up next. Have a great day. I will look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.